Welcome to Capital Business. My name is Margaret Njuguna. Today we're joined by KCB Group CEO Joshua Oigara on the sidelines of an investor briefing in Nairobi. He has just revealed that KCB Group has posted profit after tax amounting to 19.7 billion. Sir, could you kindly tell us, in these tough economic times where companies are either issuing profit warnings or losses, how did KCB Group manage to do it?
The industry, overall in the economy, we've had areas of weakness or areas that didn't go so well. So, whether it's trade sectors, you've seen supermarkets facing problems, airline industry, we've seen a lot of profit warnings. But I would say that banks generally, and KCB specific, had seen these headwinds before. So we had three strategies. Despite having an interest rate cap, we said let us increase our market share by lending to customers we already knew. So we already knew the customers, we just increased their limits. And finally, we've been able to create a better operating costs model by using technology to be efficient. So three things. Now, the industry, actually, banking sector has not been affected as much as the other sectors you talked about, because we're perhaps more prepared as an industry. And I would say that I am positive. I don't see that the concerns for profit warnings shows that there's a doom environment in the economy. Not at all. Okay. I believe that those were cyclical challenges in those industries. And this year and next year, we should see the industry come up, especially the large corporations.
Okay. Let's talk about the non-performing loans, which you say that they were up to 8.5%.
So NPL increased from 7.9 to 8.5. And the industry increased from 8% to 11%. So it's also been affected by the large businesses which had problems on their repayment. So this has been very strange. Actually, in our market, large corporates are always the best customers. Their NPL is around about 1%. The NPLs for large corporates today, for us, is 10%. And it just shows you that in a business cycle, usually, there are good times and there are bad times. So we had few customers that actually migrated, large customers, 2 or 3 customers, and therefore they increased from 7.9 to 8.5. Not a significant increase. Do we see a future? Some of them we are dealing with. Like for airlines, the major airline company, we are able to get a solution for it. And there are others which are also. So by this year, we want to go back from 8.5 to 7% in this year, in 2018. So I want to give you an assurance that it's not a systemic problem in the industry that all loans are bad loans. We have got few names. We have sector challenges and weaknesses which are being addressed, both by us, the central bank, and various ministries.
All right. On the interest rate cap, sir, some people suggest for it to remain as it is until markets stabilize. Other people demand that it be scrapped off immediately. In terms of the customer, which one do you think will favor the customers, to have it scrapped or to have it remain?
Many customers I have met, you'll be very surprised. They want to access their credit and their loans at whatever price. Many customers I meet. I have not met any today, personally, in the last year, who said the rate cap made a huge impact in my business. I have never met any. Because you used to get money for your business, then someone told you don't have the funds. What I will say in the long run or this year is that there has to be a more engagement for banks to lend responsibly to the customer. So I am for responsible lending. In
your presentation, you said that loans on mobile banking were up by 68%. Kindly tell us, what's the status of mobile banking at KCB Group and where do you see this going?
Now is in a digital revolution which has happened in our market today. In reality, customers are adopting a self-service model. And as more smartphones come into the market, people find themselves able to do their own services for banking. So I think it's a bank on your palm. That's how we see the future. So that's why our mobile payment is already good. So if you ask me about the future of branches, in reality, there are customers who go to a branch to inquire about a loan, collect a checkbook, for instance, talk to our staff, sell a business. Those advisory businesses or services will be over in the branch. That's why we are saying they remain the same. But remember, we have the same branches only at 5 million customers, with the same branches with 15 million clients.
That's true.
So the mobile is the future. I think you may see us offering in the future a mobile bank in your palm of your hands as the future of banking with any other bank.
Seeing that mobile banking is on the rise, the number of ATMs have remained constant. So do you see yourselves reducing the number of branches in the country?
But the reality of the matter is that technology in Africa is reducing the jobs. So is to find the new jobs being created, correct? And using our young people to learn those skills. So for instance, who is creating the app? Are we relying on someone outside to do it? Who is maintaining that app today? You see, who is doing the API linkages? That's you need a code or a developer. Who is able to write the algorithm for the credit lending decision for that customer? So it's true that technology is disrupting traditional jobs. So maybe might tell us they may not be available to have a job in another few years, but can they learn a new skill?
Kindly describe to us the demographics of the people who are requesting for these loans on mobile banking.
Well, young people, nearly 80% are below the age of 30, 50-50, 40% is men, women, 6% is men. It's just the young guys, basically the millennials, the young people are the ones. The loan size is not big, it's like 5,000. And they borrow for 1 month. They love this product.
Oh, really?
It's very exciting. We have 8 million borrowers on the mobile products. I love those guys. They borrow short amount, small period, and they pay back with 99% repayment.
So let's talk about the women. Last year, there's a study that revealed that women in sub-Saharan Africa are leading in terms of starting up entrepreneurship projects. What is KCB Group doing to support these women to not just start businesses, but to also sustain these businesses?
Enterprise development under the J19.7Bn program, where we are targeting 10,000 young businesses every year, men, mostly women and youth, and every year revisiting it. So we do an incubation for their businesses for 3 years, help them to build, so not for 3 years, for 2 years. We finance them. We coach their businesses. We hire them business consultants. We link them to the value chain of the businesses they're in. If you're a cleaner, we link you to a cleaning company. You do a share of their business. You strengthen, basically you extend the shades of your business, or you expand your tent, as you call it before. That's what is going to help them. You see, entrepreneurs believe that they should succeed by themselves. This never works. The reason why our businesses fail is that you start a small shop for cakes, and then you think that you can be the largest cake manufacturer today. Correct? You start making garments, and you are somewhere at the market, you believe that you will be the fashionist in Nairobi and replace this other shop that runs in the malls, Vivo clothing store. You see, so you need to be able to be a supplier in that model and then build on the steps on the value chain. If you collaborate as an entrepreneur, you'll be very successful. So the J19.7Bn program delivers a training, incubation, financing, and access to market.
Thank you so much for granting us this interview. We at Capital Business wish you the very best.
All the very best. I appreciate it.
My name is Margaret Njuguna. Keep it Capital Business.